Selling a home is one of the most significant financial transactions many people face, and doing so when there's an existing mortgage can seem daunting. So, what actually happens to your loan when you decide to sell your house with a mortgage still on it? When you take out a mortgage to buy a home, you enter into an agreement with a lender to repay the borrowed amount over a set period, with interest. This forms a lien against your property, meaning your lender has the right to take action if you fail to repay. But don't worry. Selling your home with this lien still in place is a very common scenario and perfectly manageable. The selling process begins with the listing. Once you have a buyer, you'll negotiate the sale price, sign a purchase agreement, and set a closing date. This is when it gets interesting. At closing, the proceeds from your home sale will primarily go towards paying off your mortgage balance. The key here is that the sale price must ideally cover what you owe on your mortgage. Your current mortgage lender will provide a payoff quote, which specifies the remaining balance, including any interest accrued up to your intended payoff date. This figure can fluctuate slightly due to daily interest adjustments, so timing is crucial. It's essential to ensure that the sale price is higher than or, at the very least, equal to this payoff amount. If your home doesn't sell for enough to cover your mortgage, you may end up with a shortfall. This scenario is known as being underwater or having negative equity. In such cases, you might find short selling as a viable option. A short sale involves the lender agreeing to accept less than the total amount owed on the mortgage. This requires lender approval and can impact your credit score. Another crucial element to consider is closing costs, which can include agent fees, taxes, and other charges. These costs are often deducted from your proceeds, so it's vital to factor them in to avoid any surprises. For those with equity, meaning the home's sale price exceeds what you owe, the remaining proceeds are yours. This profit can be a great stepping stone for your next purchase or investment. Now, it's also worth mentioning that if you happen to own two mortgages, like a home equity loan, the same process applies. Both loans will need to be settled at closing. Selling a home with a mortgage involves managing the payoff of your loan with the funds you receive from the buyer. Although it might seem complex at first, understanding these steps can make the experience much more straightforward. You can ensure a smooth transaction by working closely with your lender, real estate agent, and title company. This way, you confidently move forward to the next chapter of your life.